Hey, what's up, everyone? It's Sean Trades here. Hope everyone's having a good weekend so far. Now, let's go over the market, all the indices, ES, and the SPY. Obviously, broke a lot of bears' hearts, especially Friday session where we sort of had like a very volatile very sorry bearish open. However, we still ultimately held on to the 51.26 level for ES, right? We had a lot of fake breakdowns here, but candles fully did not close here. Candles fully did not close. Bearish candles also fully did not close. And we also saw lots of large wicks as we tested the 51, 25, 27, 26 level, um, which clearly shows that the buyers were um, outperforming the Bears at that time. And we eventually got it was a very choppy pump overall. However, we still did push all the way up to the 51.45 level. Now, where do we go from here? It really just all depends on next week. We still do have lots of earnings for big names coming up next week, and of course the FOMC, the fun FOMC next Wednesday. So more choppiness is likely at least Monday, Tuesday, and we're probably gonna get some sort of another liquidation move towards FOMC and go from there. Again, highly dependent on the earnings, especially of the big tech names. But leaving all that aside, technical levels are concerned. The level that we've been looking to actually short is the 5150 level because this was the previous major structural support here, and this was also the structural support that broke down and led ES all the way down to the 4964 level. So very key level here. So this will be the level that I will be watching. If we hit and reject, we could play downside with a pullback all the way down to at least this trend line right here. So around 5100, 5111, around there. And failure to hold the 5100 level, expect another downside move all the way to at least the 5018 level. Now, let's say the earnings, are came out more favorable to the upside and we end up breaking out. We will need to take out the 5150 level, 5150, 5155 level. And once we do confirm that, the next level we have here, as you can see, the volume profile, lots of volume at the 5200 level. That would be the next level to watch for. And after that, we have 5243. Now, going on SPY, very similar. We had the bearish drop right here, reclaimed it, broke down again, liquidation move, V-shaped recovery, and Friday we held above the opening price here, and sort of buyers were pretty strong at the 508 level, ended up pushing all the way till the 509 level. We couldn't quite break it as we quadruple top through the most of the session, so that was a little bit disappointing, but it still looks like we have some juice left. Gonna say it again, it's gonna all depend on the earnings, but if we do break the 509.50 level, we can easily pump at least to the 512 or the this volume level right here, 513, 514 level before we can see some sort of a more of aggressive pullback. Otherwise, that is pretty much it for me as far as market. I mean, you can look at the daily chart here too. We are sort of double bottoming here. We got the bottom one, bottom two, and broke the daily 90 AMA, but hit the 21, and we didn't quite close above 21. Close above the daily 21 would have been a huge win for the Bulls, and it would have confirmed upside just a tad bit more. As you know, closing above both 9 and 21 is a very bullish structural movement for any stock in general. But yeah, we'll see how next week plays out. I'll be really patient as it is dangerous to try and bottom the top or the time the top or the bottom, especially during news times or important weeks, or when the price is at a level where it's really hard to play any side, right? A little bit overextended to play long here. The risk and reward here for me, unless we're scalping, pennies, it's not too favorable because we do have some overhead resistance very close to how we close. Risk and reward still, still a little better for me for the downside, but you also don't want to jump in front of a bullet train, right? So just gotta wait for confirmations, play with what market gives us, what earnings data gives us, and go from there. Thanks, guys.